Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look on the gold market. So as we have explained yesterday, gold market stands right now in very, let's call it, tricky situation because it doesn't belong to itself. So in fact, the hostage of the liquidity of the liquidity on the stock market. And if you take a look at the general fundamental background for the gold, performance should be to the upside. Because if you take a look at the action that we have on the 10-year bonds, it's collapsed below the 4% and now we're on the way to the 3.7. So we talked about hand shoulders here in the previous week already. On a dollar, if you take a look at the performance, this is weekly chart, but if you take a look, for example, on 4-hour time frame chart, you do not see any growth of the dollar. So it also brings no pressure. It's, by the way, a very interesting moment when the yields are rising significantly, which means the demand for United States assets, and it should trigger demand for the dollar, but dollar itself doesn't move. What does it mean? It means that the supply of the dollar approximately equals to demand. So investors who would like to buy treasuries, they are buying dollars and investing in the treasuries. But it seems that there are also approximately equal amount of those who believe that Donald Trump policy will lead to the weakness of the United States dollar and contracting the long positions. But because if you take a look at the real or safe haven currency, you need to take a look at the Swiss franc. So take a look what's happened, what is going on here. This is real performance of this safe haven asset. Strong demand for the Swiss franc, and it's very close to the performance of the 10-year bonds, right? So mostly the same. If I switch it to the 4-hour time frame chart, this is daily, you will see also very strong downside action. That's how safe haven assets currently perform. And the gold market theoretically should perform absolutely in the same manner. This is also gold market supportive environment. But as I explained yesterday, I said in the video that don't underestimate the recent downside action. It will continue if stock market will feel bad, and stock market feels really bad. So take a look. Germany collapse, Nasdaq collapse, S&P huge collapse. So it means that investors still need dollars to fulfill margin obligations. And that actually explains why on the gold recently, despite all these positive things, we've got downside action. Here's what we've got right at the point where the stock market collapsed. So obviously that in a gold market will enjoy this pleasure and utilize these recent fundamental changes. As I explained, the drop of the yields, drop of the dollar, but that will happen a bit later when the technical rebalancing of the portfolios and technical flows of the cash will be over. So when the investors will start liquidating stock positions in the stocks, or the drop will take the pause. After that, gold market could rebound and actually trying to catch up the other markets who will stand ahead, and those who already will utilize these advanced features of the dropping of the yields and dropping of the dollar. So on the gold market, probably this will happen a bit later. So on the 4 time frame chart, you could see that our reversal with the grabbers drop was just absolutely amazing. So you can see collapse has happened as we suggested. It's retracement up from the 618 and another downward action. So what currently we could expect on the gold market? Personally, I think that today payrolls, I'd not expect some big action outside of the range. On the daily chart, you can see that lows here we have approximately around 30.11, 30.40 area. This will be oversold with the nearest fib level, so that probably will become the sell for today, although it stands relatively far. On the hourly chart, I'd not exclude if we still will get some minor bounce. This market will try to bounce here and retest 31.25 area. 25, 31, 25, 31, 30. Because here we have the fib level already tested by this action. It will be also the minimum target of this ABCD pattern, the COP. By the way, if market will come further to even to the 31.60, which will be the OP of this ABCD pattern, you could see that still it will be below the top. So potentially it still might be larger steeple to sell. If stock market will fall more, gold market also could continue. So for now, right at this point, I do not see absolutely clear bearish continuation patterns, and especially at the eve of the payrolls report, I do not want to take the short position immediately, especially when you have so fast upward bounce. So we could start speaking about the bearish position once again if we will see something bearish here, as I said, maybe garter steeple to sell, or at least if market will retest this level. So we'll complete the momentum of this upward action. Probably will happen today. Or if market will break the A point. So in this case, we'll keep going lower and we could be prepared for more extended downside action right there. So that was what we have. If you still would like to take the part in today's trading process and you don't worry about the payrolls report, maybe this one will be interesting. I don't know. So it's just look like the ABCD. The only advantage that we have here is more or less significant upward thrusting action, so some kind of the momentum that could let market, if not form the OP, but at least to climb slightly higher, return back for $10, $15 back to this area. So currently I do not see something else that might be traded immediately into this session.